Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look in the gold market. So today, as usual, in the weekly report, we are taking a look at the fundamental background on the gold market. So it's not really simple to foresee what will happen because, well, situation stands different compared to the crisis of the 2008 when it was purely financial, and currently we can't say and make the same conclusion as in 2008 because there. At that moment, we could say that yes, rates are dropping, increase of the liquidity, and demand for any assets will decrease because now inflation all run into cash, and the sell-off in the gold will also take the place. And as a result, the gold price has dropped as well as a lot of assets did at that moment. But currently, we have different situation because here we have not only financial background, and financial background is a bit different. For example, the unprecedented level of the money printing, but also currently the financial sphere is taking the second role. On the first stage stands the healthcare, and nobody currently could say that it definitely will be fast recovery of the economy. So we could get the second wave of the virus spreading. I hope this will not happen, but nobody could exclude this at that moment. We do not know what the time of the recovery will be, and also supports different view on the processes, on the events that are going right now compared to 2008. So actually, here we need few steps that should be achieved. First, as I said, no second wave. Second is the adequate support of the central banks and government of the small business in the countries. Because the first major impact will be on the shoulders of the small companies and small private business. But that's the companies that actually form the middle class and business class, and so it's very important for any economy. Well, that's why, as I said, this situation is a bit different. And on the background of the situation, we suggest that we should not expect fast reducing of the physical demand for gold. Demand for the physical gold, it's better to say. We already see the significant demand among the people in the retail gold brokers who sold out totally, especially in Europe. It's all minor small bullions, coins, and so on. So I suppose that demand for delivery among the other companies also will increase, and I suggest that probably will be some demand for the physical gold on a significant level, and that should support the market. Besides, on the money printing, on the drop of interest rates right to zero, we do not see any advantage, for example, between the bonds, which actually carries potential inflation burden of the devaluation of the currencies, and providing also no interest as the gold is. The spending on the gold carrying, well, in the coffers it also will be minimal, and all this stuff probably should support the gold because currently many people mostly are worrying about the safety of the value of their money, of their assets, rather than getting the interest on these assets. That's what we've got from today's fundamental analysis. In the short-term perspective, guys, situation with the COMEX hype, if you remember this last week we discussed it in details, now is fading. And we said that in this background, probably it's called could show some deeper retracement in the shorter term. In general, market stands in the wide range of the monthly large doji pattern, and major direction will depend on the breakout, either to the downside or to the upside. And currently on the next week, we have no choice but just focus on some minor tactical stops that we have inside of this doji. So nothing more we have on the gold market right now. For example, on the daily chart, we have bullish trend. Market stands tight around the previous top, which suggests that we have two different scenarios. First, this market could proceed higher at least to the 70 even area, back to the top. Second, market could start downward continuation here. For that purpose, we need to keep an eye on price behavior on intraday charts. If it will be downward action, in this case, we could get compounding head and return back to the idea of our hand short special. That's also possible. If market return right back up and moving right to the top, well, in this case, we consider the possible upper breakout. But in any direction, that will be some supportive news, events, fundamental, some fundamental, maybe events, maybe data release or something of that sort. So not be just by some own driving factors of the call. On intraday charts, guys, we have also a few setups that we could consider. First of all, we have to say that on a daily chart currently, this is just the approximate shape of the possible two different scenarios. But here, we do not have good context for trading immediately. So we do not have any triggering setup, pattern, something that could say us take the position on the daily chart immediately. We need to, this is some kind of the wait and see time on the daily chart. Here's what we will keep an eye on. So on the 4-hour time frame chart, if you have the Polish view, you could consider this type of action. So it could be, for example, ABCD pattern, right to the conference support, 1545 area. This market could complete. In this case, we will get the Gartler's triple to buy right inside the conference, and it will be relatively safe. Consider long position taking here because it's really high odds of the first bounce up once market will test this level. That led us to move stops to the break-even. So the simple logic. It's not definitely lead to upward continuation or reversal to the upside, but at least some harmonic bounce, maybe equal to this leg, could happen. That makes relatively safe attempt to go long here. That's the first setup that we could consider. On the hourly chart for the bears, it's another setup. It's not as good as on the 4-hour time frame chart, but that's actually all that we have. Take a look at market. It shows some fizzle with the upward continuation above this area. So you can see a lot of overlapping candle. It's definitely, you could see that some selling pressure appearing around this level. So last week we considered this level. It's also 618 resistance. The actual market has completed this ABCD pattern, and we have kind of the Gartler's triple to sell here as well. Market starts to forming widening triangle accompanied by the divergence. Well, this is not the superb bearish setup as well. It carries some risk, but the advantage of this setup is that you could place relatively tight stop. So if market will start downward action at all, it probably will start somewhere from this area. And this makes, potential risk of this trade not very significant. So you could place stop just above this area. Because it will be either definitely will go down or upward action also will happen right from here. So market will erase this bearish context and starts upward action. So we will get clarity very soon. So that's actually all that we have on the gold market right now. So if you have the bullish view, it's better for you to wait for forming of this pattern, or at least, or you could use, for example, I don't know, maybe stop buy order somewhere about the 1630. In a way of if in the case of market will break it up and continue upward action. For the bears, you could consider this setup on the hourly chart because it doesn't have the very strong patterns, but it makes it possible to take the position because very close invalidation point makes overall risk on this trade very small. And we will focus, of course, on the monthly large doji pattern because breakout of this doji will set the direction of the gold market for a long-term period.